The 2025 market crash is here. And while most investors are panicking, the smart money is quietly buying real estate. Not just any real estate, REITs. Real estate investment trusts that are beating the market, paying monthly income, and holding their ground while tech stocks nosedive. In today's video, we're covering 3 of the safest, highest-yield REITs you can buy right now: Realty Income, Camden Property Trust, and VICI Properties. These aren't speculative bets. These are fortress stocks built for exactly this moment. Let's break it down. Before we get started, go ahead and hit the like button and subscribe to our channel. We are happy to have you here. First up, the big picture. The S&P 500 is struggling, rate cuts are delayed, inflation is sticky, commercial real estate, a bloodbath in some sectors, but not all of them. This is where most investors miss the mark, because not all REITs are created equal. Smart investors are targeting one specific type of REIT, the kind that's backed by hard assets, stable cash flow, and tenants who don't miss rent payments. Let's dive into pick number 1. Realty Income is the monthly dividend company. Literally, it's in their brand name. They've paid over 640 consecutive monthly dividends, and they've increased their dividend more than 100 times. Why is this stock so stable? Because it owns over 13,000 properties across the US and Europe. We're talking Walgreens, Dollar General, FedEx, 7-Eleven, essential businesses that pay rent like clockwork. In a market like this, that consistency is gold. And right now, shares of Realty Income are trading at a steep discount thanks to higher interest rates. But that's a gift for long-term investors. This is a stock built for passive income, even during chaos. As of April 2025, it's yielding over 5.7% and has room for capital gains once rates fall. And guess what? That monthly dividend? It keeps compounding. Next up is a REIT tied to one of the strongest housing trends in America: Camden Property Trust. Camden isn't just a REIT, it's a pure play on the Sunbelt migration trend. This company owns and operates more than 170 apartment communities in high-growth cities like Austin, Tampa, and Atlanta. Here's the key. While office space is crumbling, multifamily housing is thriving, especially in states with job growth and population booms. Camden has a high occupancy rate, strong rent collection, and conservative debt levels. Even during rate hikes, Camden kept raising its dividend. And now, as the Fed hints at future cuts, this REIT is perfectly positioned for a bounce. It currently offers a 3.8% yield, but the real story is price appreciation. Analysts see 20 to 30% upside once the market stabilizes. If you're looking for exposure to residential real estate with less drama than house flipping or landlord headaches, this is it. And finally, number 3, VICI Properties. VICI owns America's most iconic entertainment properties: Caesars Palace, MGM Grand, the Venetian, basically the Las Vegas Strip. But here's the kicker: VICI doesn't run casinos, it owns the land and buildings and collects the rent. And these tenants, they're locked into long-term inflation-protected leases. During COVID, VICI collected nearly 100% of its rent, and during this market turmoil, it's doing the same. Its dividend yield is around 5.9%, and it's grown that dividend every year since going public. While everyone else is worried about interest rates, VICI is quietly printing cash, and it's expanding outside Vegas, buying up resorts, golf properties, and entertainment venues nationwide. Bottom line, if you believe America still likes to travel, gamble, and be entertained, this is one of the most recession-resistant ways to play it. Realty Income for monthly cash, Camden Property for rental growth, VICI Properties for inflation-protected income. This trio covers retail, residential, and entertainment. You're not just diversifying sectors, you're building a crash-resistant real estate portfolio without ever dealing with a single tenant. Want more high-yield stock picks like this? Hit subscribe and download our free guide, 5-Minute Money Shift. It's linked below and will show you how to find income opportunities others are missing. Let's wrap with some final thoughts. Right now, investors are divided. Some are paralyzed by fear, others are positioning for wealth. The difference? Strategy and timing. REITs like these don't stay discounted forever. Once interest rates drop, and they will, these dividend stocks will be the first to bounce. You can either chase the recovery later or position now while prices are suppressed. Final reminder, this isn't financial advice, it's information and opinion. Always do your research. But if you're serious about building wealth during this downturn, these 3 REITs should be on your watch list.